Bazaar Morning Call, live from the CNBC TV 18 headquarters in Mumbai.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me Anuj and Sonia. Well, yesterday the Indian markets showed some support at that 11,550 mark, but we are waking up to negative cues today, growth cues largely. As it is, we've seen the United States, the Dow Jones indices sulking ahead of the results season, which is expected to be the weakest in many quarters, maybe even a contraction. IMF, more importantly, has cut the global growth estimate for 2019 to 3.3 from 3.5. So it's, compounded with that is the US earnings expectations, which are also muted. And that's why you've seen Wall Street underperforming or rather falling for the last 2 days. And today Asia is also taking these IMF cues. What about India? IMF has cut the Indian growth forecast as well to 7.3 from 7.5. That's not new news at all for the Indian markets. We've been discounting auto sales and core sector and GDP numbers for the last several months now. But nevertheless, we'll have to see whether India will chart its own course, whether that 11,550 spring that we saw late yesterday or in late trade yesterday, whether that continues, or whether these global growth cues, after all, there is a lot of global ebb and flow of money. Yesterday we saw 1,200 crores. Whether if that money is absent today, whether today we also will fall in sync with the global cues.
Okay, hi Lata, good morning. Hi Anuj, morning. The market so far has bulldozed all negative cues, right? I mean, you look at the numbers. You were talking about 1,200 crores of buying in yesterday's session. In 3 days put together now, FIs have bought about almost 2,500 crores. That's the kind of money coming into our markets. There was big delivery-based buying in banks yesterday, whether it's PSUs like SBI or private sector banks like Yes Bank. Quite a bit of buying seen there. And the Nifty Bank, in fact, was up more than 400 points from the day's lows. So I think this market is still in the firm grip of the bulls. Anuj, morning. You were telling us yesterday that, the best strategy is a buy on dip strategy. Would that still work today?
Morning, Sonia. Look, yesterday was copybook stuff, and yesterday, I think yesterday was one of those days where you just had to just plan your trade and execute it, and the market would have taken care of you. The market rewarded you if you followed a basic risk-reward concept yesterday, which is to buy and put a stop loss at the 20-day moving average. In a bull market, you normally defend the 20-day moving average. What yesterday has done is it's established very clear double bottom at 11,550. We're talking just absolute near term. And the Nifty Bank has got its mojo back, which is also likely to now go back to its all-time highs perhaps. I know there are some negative cues in terms of global cues and growth fears and all, but the markets made mockery of all of that previously, and the market should do that. In fact, the weak global cues will present a good opportunity today.
Because crude is lower.
Exactly. First of all, no, I don't know if the way SGX Nifty is indicating if it will pan out like that. I think we perhaps will not have that kind of gap down. By the time we open, perhaps even that recovers. But the first dip, if any, will be bought into. If this global trend continues, there's likelihood of a second dip around the European opening time. That will be the bigger test of the market. But the one point that I've been making for some time, this market has unfinished business. I think it's got another 800 to 1,000 points on the Nifty before election results are out.
That much? Okay.
It will factor in, the market will
That's
factor
12.5.
in. Yeah, market will factor in, PM Modi coming back with, same majority or something like that. This market will factor in that. Post result, there would be some correction, but up until results, I think all dips will be bought, and it's clear that it's one market which has been picked up by FIs as something which you want to play for momentum, and momentum can do crazy things. The only thing is that next time when you get a dip like 100, 150 points and the market gives you that opportunity, you have to take it, and you have to put your stop losses, you have to put your hedges in place, but you have to buy this market. There's absolutely no doubt about it. Let's see if that's how the market opens, because yesterday's momentum was very strong.
Okay, let us play good cop, bad cop over here. I want to put one more negative, occurrence, the Kotak FMP, the fixed maturity plan, has returned less than the principal. This is very unusual. You normally see your principal getting lost only in equity markets. If we can get the main headlines of what Kotak announced, that'll be a little helpful. This can be a bit of a scare for debt investors. And because there is less debt money available, there can be a problem for some equity stocks, beleaguered stocks, or those who go and take money from the debt market through CPs or bonds. That's just yet another negativity that may hit. Its maturity was April 10th, and it's, as our producer is very helpfully telling you, the collections were 457 crores, but they did not have as much to distribute, and therefore there is a slight loss in principal, which, if it becomes a debt market event, then we could have less flow of funds. It could just slow down things.
On that, I have just one simple issue. You either invest in full equities or you invest in, if you're taking debt, go in G-Sec. You can't have it both ways. You either take risk and play for equities, or don't think about that extra.
Anuj, that is a personal philosophy of yours and mine. After all over the world, there is a whole range of junk bonds, AAA bonds. Yes. It's a big market. I know you and I very much are on the same page on this.
Just keep things simple. There's gold.
Either take risk or don't take risk.
So in this case, they will get their part redemption proceeds upon the scheme's maturity, and the rest when they recover it.
And when Z pays back, or ITNL. I mean, so there are a couple of instruments which have not paid back.
So it's not completely written off, at least as of now.
Yeah, okay. It's not completely written off, but nevertheless, it's a bit of a shock. No, I wouldn't say that. I think ITNL with a haircut of 40-50% will return. ILNFS will return. I don't think they have ILNFS. I think it's ITNL. But anyway, we'll discuss those details in a bit.
Okay, well, we'll keep that in mind. That's a big cue, actually, that we're picking up. But as of now, let's kickstart the show and tell you what's on our radar, what our wise experts have to say as we head into trade this morning. Sanjeev Prasad of Kotak Institutional Equity says the Indian market has largely ignored the recent economic growth deceleration, a rebound in crude prices, and deterioration in India's fiscal position. They find valuations are largely unattractive for most parts of the market, and they expect a potential downside risk to earnings in the event of a further slowdown in the economy. Kotak believes the slowdown is partly due to structural factors and could persist for longer than is broadly believed. They add Torrent Pharma to their recommended large cap model portfolio, and they've removed ABB. They also add DLF and replace Tata Steel, while they remove Jubilant Food from their recommended mid cap model portfolio.
Okay. Well, let's get you some money market views. Pramit Brahmapatra Veracity says the rupee will have a sideways move for the day. Thus, the trading range for the spot USD INR pair could be 69.20 to 69.50.
All right, and Dhaval Dalal of Edelweiss says rising crude prices failed to deter bonds whose prices made a smart recovery yesterday. Market participants attribute this to short covering amidst expectations of strong inflows and prospects of appreciation in the rupee in the near term. He says March CPI is likely to be around 3% year on year. All eyes will be on core inflation. Edelweiss remains bullish on bonds, and they expect the 10-year bond yield to trend towards 7% in the medium term.
Okay, slightly weak global cues this morning. Here's Nigel with the world view.
Well, that's right. Overnight, the US markets, they ended in the red. In fact, all factors were against the global markets. The US markets are a little nervous ahead of the earnings season. You had the IMF that's gone ahead and cut their global growth forecast. And also President Trump again talking about putting tariffs, this time on the European Union. In yesterday's trading session, we had Boeing. The stock continues to be under pressure. It was down 1.5% after falling 4% in the previous trading session. The street out there is getting concerned about the production delays on that front. And remember, it's the largest weight on the Dow, so that was lower, didn't help the Dow. But otherwise, the Nasdaq as well did see some selling because a lot of those stocks were under pressure in yesterday's trading session. You had Apple that ended lower, Alphabet as well was lower in yesterday's trade. Now the street is going to be focusing on earnings, and in the next 10 days odd, we'll get numbers coming out of a lot of big companies that are flashing for you on the screen, a lot of these banking names as well. And in terms of a forecast, well, for the S&P 500, after many, many quarters, or after a couple of years, in fact, the first time since 2016, the street is talking about a degrowth in terms of earnings. So that's something that's plaguing the mind of investors out there. That's about the European markets. But we had a tweet coming out from President Trump yesterday. He was reacting to a WTO report, and now he's talking about putting, some tariffs on 11 billion worth of European Union goods. So on the back of that, we had the European markets as well that were nervous in yesterday's trading session. All the frontliners, they ended in the red. He was referring to reports in terms of Airbus. So he was targeting Airbus, and he said that he'll put, tariffs on other goods as well. So European markets were low, and a lot of those other stocks as well, the likes of Rolls-Royce as well was under some pressure. Dassault as well did see some selling in yesterday's trading session. But if we're looking at the Asian markets today and looking at the currency space on the whole, we are seeing some strength on the yen. Not good news for the Nikkei, but otherwise as well, Asian markets are struggling. Keep an eye out on the key monetables. There's some cooling off in terms of the dollar index. Now that's come down to around 97, but Brent crude prices continue to hold closer towards $71 per barrel. The IMF as well, they have cut their forecast for global growth to around 3.3%. Not good news for starters. SGX Nifty indicating a start in the red. Back to you guys.
Okay, Nigel, thanks a lot for that. So 3.3% is the growth outlook. This will be the lowest since 2009. That's really the big headline globally. The IMF cutting both global as well as India's growth forecast. India's growth forecast has been cut by 20 basis points for the current and the next financial year. The IMF's chief economist, Geeta Gopinath, says they are watching India's macro data very closely. Speaking exclusively to CNBC, Geeta adds that it is imperative for India to communicate transparently given its significance in the global landscape. Listen in.
There are important revisions that were made in 2015 as a part of modernizing India's national account statistics, and so that is certainly welcome. I mean, that said, there are still some issues that need to be fixed, and this we have flagged before with respect to the deflation, or the deflator that's being used for estimating real GDP. I mean, this is something we have flagged in the past. With regard to the newer numbers that are coming out, I mean, we are paying close attention to it. We are, speaking closely to our colleagues in India, and I think then we will make a determination based on that. India is projected to be growing over 7% both in 2019 and 2020, which makes it one of the largest, fastest growing large economies of the world, which is why it's even more important that the statistics coming out of China out of India are transparently communicated, and that because everybody is watching India at this point. There were several factors that weighed negatively on growth, especially towards the second half of 2018. So we are projecting growth to slow from 3.6% in 2018 to 3.3% in 2019. And what's changed is the trade tensions that were high, especially towards the end of 2018, the needed credit tightening in China, the tighter monetary policy, again in 2018 by major central banks, and there were country-specific shocks that happened in Germany in the auto sector, Japan with natural disasters. All of these factors have contributed to a significantly weakened outlook for 2019.
Okay. Well, it's important to note that the IMF is saying that they're closely watching the Indian deflator and the Indian real GDP calculations. That's yet another institution which is watching the way in which these numbers have been revised up and down. And just that's a caution on the table. It's not just slowing growth, it's also the quality of the numbers that IMF has commented in a very, very diluted and veiled manner. But nevertheless, it's important that we don't play around with these numbers, or at least calculate them as per international standards.